Market trades near day's high. Nifty crosses the 24,700 mark, led by gains in FMCG, Realty. Broader market trades in line with the benchmarks. The Nifty above that 24,700 mark, above important technical levels too.
Sugar stocks surge and trade after the government removes curbs on producing ethanol from sugarcane and sugar syrup.
Shares of Reliance gain on the back of a Morgan Stanley note. They have an overweight call on the stock, target price of 1,700 rupees, expecting AI adoption and China's anti-involution policies to be key tailwinds for the company.
Sun TV trades high after Vendis buy call on the stock with the target price of 680 rupees. The brokerage turns constructive, positioning the company as a proxy for investors to participate in the monetization of sport. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Manglam, and it's a good-looking screen. We had a good start to the trading session yesterday, and we are seeing some follow-through buying today as well. So Manglam, it's looking quite good. Straight off the bat, a 100-point up move is what we've seen on the Nifty. It is a century, as you can see at the top of the screens. The only thing I'm watching out for, Nigel, is when will Nifty Bank participate right now? You know, because over the last 10 days or so, the Nifty Bank has not been participating with as much gusto as the Nifty has been doing well. The Nifty is now above important levels as well. What has led the rally so far? We've seen some traction come from the IT stocks yesterday. Today, it's Reliance, which is doing well. But across the board, we've seen some purchase in the FMCG stocks. The street believes that the second half of this year likely to be a lot better as well than the first half of this year. And talking about FMCG itself, the index is at the high point. We have Marico. I spoke to the management and started on asking about their food portfolio and how they're targeting growth in their overall business in the very near and the medium term as well. Let's hear out what Saugata Gupta had to say.
We started, if you look at our Saffola journey, it was towards making a heart-healthy India. And then I think the entire Saffola journey has been on designing better for you foods. Better for you foods means, if we look at it, having healthier grains like oats and millets instead of maida, not having any palm oil in most of the formulations we develop. At the same time, having a balance this one. And we also have two other brands in our portfolio today, which is Plix and True Elements. True Elements, again, is a brand which is true, free from all nasties. It is in breakfast cereals. It's in, nut seeds. Plix is in the area of nutraceuticals. And I think nutraceuticals is something which we believe is a very, very high potential category in India. I think one of the tasks, of course, is to make it much more affordable and available as a category. And if you look at nutraceuticals, it can cover the entire gamut of weight management, heart health, diabetes, bone health, gut health, stress and sleep. And I think that is something which, if you really look at it, is something which will, as a category, it will certainly has huge potential to grow. At the same time, of course, fortification, whether a fortification with vitamin, fortification with minerals, fortification with omega-3 and others in our core categories is a continuous journey for us.
So in that case, could you give us a size of the total addressable market here, and what proportion of that is Marico, aspiring to garner?
Still very small, and I think there's enough opportunity to grow. Having said that, I believe what is happening is that consumers are increasingly choosing healthier eating options. If you look at the kind of consumption occasions, one is, of course, breakfast. One is the main meal, which is, which, of course, people still prefer home-cooked meals. Of course, there's a huge kind of a proclivity to order food, given today it's far more accessible and available. But there are also in-between meals occasions, which are snacking occasions. And what we intend to do through our offerings is ensuring a share of wallet in that occasion. Because I think people, while they want to indulge, they also want to have better for you foods. And of course, if you really look at India today, the packaged food industry, there are two vectors of growth. One is unbranded to branded. Branded is far better in terms of quality, in terms of hygiene. And the second one is, of course, having food which are better for you. And the runway for growth is tremendous. And I think the packaged food industry, with also all the government incentives that are coming in, I believe this is one area in the consumer goods space which has tremendous legs for growth in the years to come.
All right. Speaking about the consumer space itself, in the very near future, we are expecting, GST rate rationalizations to come through, as the Prime Minister was speaking about it. For your business, what do you think could be the benefits immediately? Would you be, looking at, seeing an increased volume because of the price benefits that you will have to pass on to the consumers?
I think one of the things is rate rationalization is something which I think is a tremendous opportunity to drive consumption. And it is happening not only in consumer goods, it's expected in things like auto and durables, which will definitely catalyze. It's a very, very bold move by the government and the entire simplification and rationalization. It will definitely catalyze consumption in the country. As I said, that in India, a lot of categories have low penetration, and affordability and availability are the two drivers of growth. And obviously, each one of us will pass it down and across industries so that to fill up consumption. This is a right time actually to drive consumption in this country. And this is coming on the back of some of the tax savings which have been given by the government. So I think the combination of this is that a multiplier effect will be very good.
All right. We last spoke after your first quarter numbers. A little more than a month has passed since then. In that month, is there anything particular that has changed or anything that has happened for you to call out when it comes to input prices, when it comes to volume offtake, when it comes to the near-term outlook?
I think there has been a marginal drop in input costs, which will obviously then benefit as we move towards the second half of the year. This is something we were expecting. I think consumption and the entire continues to remain steady. We expect a gradual improvement in consumption to happen in the second half of the year.
So a couple of quarters of double-digit revenue growth, double-digit volume growth you had called out for earlier. You still hold on to that, right?
So what we said, we will aspire to touch double digit in a couple of quarters, and something which we will still aspire to, yes.
And not happening in the second quarter for sure.
I think as I said, it's too premature to give anything. But as I said that we have experienced sequential uptake, and today we have moved to a stage where we have delivered now high single-digit growth. And somewhere during the next couple of quarters, it will be good to touch double digits.
And the margin pressure is waning. You said that there has been incremental decline in raw material prices, so we can expect margins to normalize soon?
So as I said, that there is a marginal decrease in input costs. It will take some time, obviously, and we will see how it pans out in the second half of the year.
All right. And, your trigger will also be the operational improvement of some of your diversified portfolio, your new age businesses. Case in point, something like Plix, True Elements, and all of them, as they scale, they will start to contribute operationally as well. If you could give us a sense on the operational breakthrough for all these companies, the operational break even that is. And are you looking at any more acquisitions after the ones that you've made already?
Plix and Beardo has broken even, and Beardo is on the around double-digit EBITDA. And this part of the business, we will drive aggressive growth and continue to ensure that they will help in achieving our aspiration of delivering a 10% EBITDA for this digital part of the business over the next 2 years. The other two, True Elements and Just Herbs, we have a slight burn, which we are aggressively driving break even over the next 18 months to 24 months.
All right. And any acquisitions? Because Zydus Wellness just made an overseas acquisition in the nutraceutical space itself, in the vitamins, minerals, and supplements space. Are you looking at the VMS space, as they call it? Any domestic or international acquisitions on the anvil?
I think we believe that our entire strategy in terms of acquiring some of the digital brands and filling up some of the adjacent spaces will continue. And as and when an opportunity arises, which is a strategic fit, which has the right valuation, we would be certainly exploring it.
All right, always on the lookout for some acquisitions, says Marico. There has been improvement in consumer sentiment, with GST being the next big trigger. The stock at the high point. Take a short break, come back, focus on the management that we have lined up for you. We have Genius Power. The company joins in for a quick business outlook.
Welcome back. Let's focus on Genius Power. That's the next management on our radar. We have Mr. Jitendra Kumar Agarwal, the joint MD, who joins us on the show. Hi, Mr. Agarwal. Good morning. Thanks a lot for joining in. Well, let's get a couple of numbers out of the way. You've had a very strong start to the year, delivering nearly around 1,000 crores of revenues. In FY24 or even before that, you were doing 1,000 crores in the full year. So it's been a very good start to the year. Earlier, you were guiding, I think, for around a mid-20% growth on the revenue front. Now, that clearly will have to be revised going by the run rate that you've started at. So for the year, what kind of a revenue growth are you looking at? How many installations of meters, if you could give us the volume number and margin outlook? 3 numbers, sir. Revenue, volume, margins.
Good morning. It's always a pleasure coming back to your show. So this year I've been giving the guidance of 4,000 crores. So definitely we are going to do that. And with a margin of 18 to 20% on the EBITDA side. So we continue to maintain this guidance, what we have given earlier. So there is absolutely no problem in these numbers. Rather, we are confident that we may cross these numbers. In terms of number of meters, we will do 13 to 15 million. We will manufacture 13 to 15 million meters in this financial years. So on margin, number of meters and
all right, so 13 to 15, that we get that point, 4,000 crores this year's revenue, and you are confident of surpassing that number as well, and 13 to 15 million meters. What about margins? You said you are likely to see improvement in margins as well. What is the number that we should be working with?
We have been maintaining the guidance of 18-19%. We continue to maintain that.
Okay, because first quarter you did about 21%, which is what made me ask you about that 18-19% mark itself.
So, yes, first quarter we did 21%. But there have been some ups and downs because the projects are taking shape over the period of time. So that is why we are maintaining this guidance. But yes, maybe we come out with a new guidance by the end of this calendar year.
All right. So, the other problem is the street is very excited about this smart meter opportunity. But there has been some kind of a slowdown with regard to tendering is what we understand. Your order book is healthy. Could you tell us what is in the pipeline? What is the total bid book, if you could call it that? What is your success ratio normally? And if you could talk about the states from where you expect to get business.
So just to give you a heads up on that, in RDSS, total 23 crore approx meters were approved by the central government. Out of those 23 crores, 13.5 crores to 14 crores has been ordered. So remaining 10 crores has to be ordered over the period of time. Right now, 3 large tenders are going on, 2 in Delhi, BRPL and BYPL, and 1 from Tamil Nadu, which are 6 projects. So all these 8 projects has been quoted by Genius, and I am pretty confident by that within this month or by next month we'll have start flowing the orders again in the company.
All right.
What is the total, if you could quantify, sir? 3 large projects is what we're talking about. Delhi, Tamil Nadu,
and 2 in Delhi and 6 in Tamil Nadu. In total, these are 3.5 crore meters.
3.5 crore meters, got it. And if I had to put a value to it, roughly it would be what?
You can always take a benchmark value of 10,000 rupees per point. So 35,000 crores.
35. And your success ratio will be what? Normally, how much is it? 20%, 10%? If you could tell us roughly.
So generally, we have been getting good orders. We are one of the largest AMIS players in the country. So we are confident we continue to maintain our.
So, of the 35,000 crore bid, how much are you confident of winning, at least going by your past run rate?
So, definitely, I'm confident that we will achieve the past run rate, but it is very difficult to put a number on that.
What is the run rate, sir? Normally, okay, could you tell us, as of now, what is your market share?
So, if you say currently, total around 3.5 crore meters has to be done by Genius in total, what we got as a market share. So, out of 14 crores, 3.5 crores has been won by Genius.
All right. So out of 14 crores, it's roughly about sub 20%.
Yeah.
All right. And that is the likely run rate from the bidding that you would get as well. We will do those calculations at the back end. Just final question before we let you go. There were a lot of news pieces that came by, which was with regard to the Rajasthan projects. There was impact of tariffs imposed by USA. You've clarified on all of that, including the one that was blacklisted in Goa as well. You said you were never technically blacklisted by the Goa Electricity Department. It was the internal memo which you have challenged already. Has there been any resolution on that? Has the High Court come back?
No. So just to clarify it further, there was an internal memo from the Goa Electricity Department which we challenged. It was 1 year back. So the internal memo, it came to our knowledge on 5th of September 2024. On 24th of September 2024, High Court quashed that order, and on 3rd October 2024, Goa Electricity Department withdrawn that internal memo. So Genus technically has never been blacklisted, and whatever the non-technical blacklisting, that also was cleared by 3rd October 2024.
Okay, all right. So if I look at it, 14 crore meters have been installed, 3.5 crore by Genus. So you're actually a little more than 20% of the total market as of now. Fair to assume that number?
So yes, as an AMISP, fair to assume that number.
All right. And what about your JV partner? They have a stake in the listed entity as well. Yeah. And there was that, report that suggested that they wanted to sell some stake. Have you heard from them, or do they want to hold on?
I want to make it clear again, which I made it last time also on your show, that there are two entities from GIC. One, the platform created between Genus and GIC, which were continuously, all these new tenders are also quoted together under that JV platform only. And the other entity, which takes the stake in the listed company, only a very small portion of that total stake, because that is the way they work. Then when they have got a good upside, they will sell some stake in the market. This is how they work as a GIC. So I don't see any problem between Genus and GIC. Rather, we are becoming more and more stronger in the times to come.
So there is that pending block maybe in the listed entity, but you're saying the partnership continues in the JV that you'll have, where I think you have 26% and they have the 74% stake.
So that is and that is a much larger investment for GIC than the investment in the listed company.
Appreciate you joining in, sir. We look forward actually to chatting up with you in the second half of the year, because by then we'll have clarity in terms of the order wins. We'll also want some clarity on the working capital days. But appreciate you joining in, sounding extremely confident for FY26. We'll track you on all these numbers. Take that break, come back, continue our focus on stock-specific action. Well, the GST Council is set to meet on the 3rd and the 4th of September to discuss the Centre's proposal for simplified two-slab structure. Timsy joins us to fill us in with all of those details. Timsy?
Prime Minister Narendra Modi's vision in his Independence Day speech on next-generation GST reforms could soon be a reality. The GST Council is set to meet on 3rd and 4th of September to discuss the Centre's proposal to shift to a simplified two-slab structure of 5% and 18% with a special 40% rate for sin and demerit goods. If approved, the move will make a wide range of common use items cheaper. Daily necessities such as soap, shampoo, medicines, hair oil, toothpaste, biscuits, namkeen, bhujia, footwear and apparel below 2,500 rupees, along with ghee, butter, pencils and exercise books are expected to fall in the lower category of 5% or even in certain cases exempt. Aspirational goods such as television, refrigerators, washing machines, microwaves, small cars and motorcycles below 350cc, which are currently taxed at 28%, may move down to 18% slab. The proposal also includes a major relief for consumers and industry with life and health insurance premium, as well as reinsurance likely to be exempted from GST. While the Centre is confident of a smooth passage, states have raised concerns over possible revenue losses. They have sought assurances of revenue protection, pointing out that they are not opposed to the rate rationalization but need compensation to meet their financial obligations. Also, a mechanism to ensure that the rate cuts are passed on to the end consumer and not result in any windfall gain for any of the companies. The September 3rd and 4th Council meeting is expected to be a crucial one, with the potential to usher in a new phase of GST, simpler, consumer-friendly and aligned with the Prime Minister's reform agenda. Something that we'll have to wait and watch for the Council as to what finally passes through.
Take that point, MC. Thank you for that. With that, we'll wrap up on this edition with the news that the Nifty is up 110 points, a little more than 10 points higher than when we started the show, 100 points higher from the morning itself. Take your leave. Trading Hour comes up next.